What's going on? Alex here, and today I'm answering questions from the YouTube comments. That's right, you guys post questions, I give you the answers. It's a beautiful thing. And have I got an interesting set of questions for you guys? Now, today we're dealing with questions from a viewer named Peter, and this has to do with sugar baby and sugar daddy taxes. Here's the thing. In recent times, the sugar daddy, sugar baby relationship, situation, whatever you want to call it, I believe has become a lot more prevalent and has been brought to the forefront of society in many ways. Because whereas back in the day, this would be all kind of hush-hush, done under the radar, nobody's really making a big deal out of it. Now, this is something that's conducted through apps. You have entire businesses based on this new industry. You have, well, I don't know how new it is, but new to the eyes of the public and the IRS in many cases. It's kind of strange, you can roll down the street here, you see billboard for a marijuana dispensary, billboard for a sugar daddy website. It's kind of fascinating how all that has come together. But at the end of the day, there are income tax implications here because there are amounts going from one party to the other. There's questions of whether it's income, gifts, all this sort of stuff. And at the end of the day, we do need to address these issues. Now, let's take a look at the questions. Now, as I'm going through these, you have to consider the following. The tax laws are written in such a way where they provide a baseline understanding of how we treat certain items of income, deductions, and all those sorts of things. On top of that, we have what are known as regulations, which are issued by the Treasury instead of Congress. Congress does the tax laws, the code, and then the Treasury issues regulations with the goal of explaining or providing more detail with regard to how those tax code rules created by Congress should be interpreted and understood. But a lot of the guidance that we get in terms of how to treat certain items actually come from court cases, specifically tax court and other courts that have cases presented in front of them, and they then decide gray areas which the tax code and the regulations did not clarify all the way, or if they did clarify it, the court will stipulate that this is clear from the code and the regs, that this is the intention of Congress, so on and so forth. With that said, there have not, to my knowledge, been a tremendous number of cases that have to do with the sugar baby, sugar daddy relationship, given that this industry is as new as it is. Now, I'm sure it's been going on for many years beforehand, but now with everything so digital and the fact that it's based around apps and so forth, there's going to be some sort of tax reporting that comes out of it in many cases, especially if you have things going on like OnlyFans where you're going to receive a 1099 at the end of the year, which you're going to need to account for. So these are all applicable questions. The thing is, you should consult with a tax advisor because I got to tell you, if I was filing a tax return for the sugar baby or sugar daddy, there's a lot of complicated questions that arise with regard to what's income and what's a gift, what's a deduction, what is a business expense, a lot of gray areas here. And that has to do with the fact that it's so new and we don't have a lot of tax court cases and district court cases to rely on to clarify some of these items for us in this sugar baby, sugar daddy context. All right. So take everything I say here with a grain of salt, and you definitely need to consult with a qualified tax professional on both sides to see how this should be treated and where the lines are going to be drawn between gift, income, business expense, and so forth. So let's take a look at these questions. Now, the first one is whether a 1099 miscellaneous would be issued to the sugar baby. Essentially, if the sugar baby is conducting this activity with a profit motive on a regular basis, more than likely that's going to be classified as a business activity for income tax purposes. Now, if this person does not have an entity put in place like a corporation, S-corp, anything like that, then they would be treated as a sole proprietor. So if you're an individual that's paying that sugar baby to provide a service, then if it's exceeding that $600 amount annually, then you would generally be required to issue that person a 1099 or 1099 NEC or non-employee compensation form on an annual basis so that that person can report that on their taxes. All right. But the question of what's a gift and what's income comes in, because what amount do you put on the 1099? If you paid this person $10,000 for services throughout the year, and then you got them a bouquet of roses, does the bouquet of roses fall under income, or is it a gift? So is the 1099 issued for $10,000 or $10,100 to include the roses? That's where the gray areas come in, and it's going to be tough to create a fine line between gift and income in this case. So the number that you put on a 1099 miscellaneous, that's going to involve a little bit of work and maybe some creativity to make sure that the end result complies with all the applicable rules and regulations from an income tax perspective. It's not an easy call in some cases. So in general, yes, if the total amount exceeds $600 in a particular year that you're paying to a particular service provider, you would issue a 1099 miscellaneous or 1099 NEC, but the amount that you put on that form is debatable because, again, there's some difficulty in terms of classifying transactions in some cases. All right, number 2. If a sugar daddy does not issue a 1099, I wonder if the cash/merchandise, etc., are presumed to be gifts and thus subject to gift taxes. So I did a video on gift taxes way back in the day, and essentially the person giving a gift can give up to $15,000 in tax year 2020 to another individual and not have any gift tax implications whatsoever. So if the total amount is under $15,000 that you give somebody as a gift, no filing, no gift taxes at all are considered. However, if that amount exceeds $15,000 in a particular year, then you have to file Form 709 to report the gift. That is the taxable gift. So anything exceeding that $15,000 is going to be the taxable portion. So what that taxable portion does is essentially reduce the lifetime exclusion from the estate tax that you have as an individual. And in 2020, it's about $12 million per individual. And the more taxable gifts, meaning the gifts in a particular year to a particular individual exceeding $15,000 that you give, that is going to cut into the lifetime estate tax exclusion that you have. And you only pay gift taxes as the person giving a gift once you've exhausted completely that $12 million, at this point, it's $12 million, estate tax exclusion amount. All right, that's a lifetime amount, and it's going to be reduced every time you give a taxable gift in a tax year exceeding that threshold in 2020's $15,000. Going back to the question, it's not so much whether you issue a 1099 or not. That's not going to affect the tax treatment of the amounts of cash, merchandise, whatever that was transferred. It's the nature of the amount transferred. Is it compensation? Are you paying for a service? Or is it a genuine disinterested gift where you're not expecting anything in return? You're doing it out of the goodness of your heart. Very difficult to delineate in these situations because the default treatment is that most, if not all, of those amounts are going to be income to that other individual that's providing the service, because you can make the case that, well, hey, if you didn't have this business relationship happening, there might not be exchange of anything going on. So any of those exchanges are then facilitative of that business relationship, which would, in general, negate gift tax classification, whether or not you issue a 1099. That's immaterial. So it's not going to change the tax implications of the situation. It's really the facts and circumstances that are going to drive the tax treatment. Again, consult with your tax advisor. This can get complicated, even though it seems very simple, because if I'm the IRS, if I'm the auditor, I want to deem everything as income so we can make sure that the sugar baby recognizes all that income, pays taxes on it. However, if you're the taxpayer, you want to possibly make the case that some of these amounts are not income to that other individual, maybe they're gifts. So a lot of considerations at play. All right, moving along. Airfare, train fare, use of Uber account would be includable, assuming you treat this as income to the sugar baby. Yeah, essentially, it's hard to draw that line very clearly in a few of these situations, but I can tell you that by default, you would likely want to start with treating everything as income to that individual, putting it all on 1099. Start with that, and then see if you can make the case for saying that some or all those amounts are gifts. I think you'll have a hard time, but I haven't devoted hours and hours of research to it, to be quite honest with you. It will be something to look into, but at the end of the day, most, if not all, of these amounts would be considered income to the sugar baby unless there's a reason to consider otherwise, right? Because think about it. If you didn't have that relationship in place, that exchange of goods for services, would any of these amounts have been transferred? Likely the answer is no. Some of us might say, yeah, of course, this person's great. I want to treat him to nice things. That's all well and good. But again, income tax has a very stern, kind of broad view on things. And a lot of this has the feel of income. A lot of this feels like it should end up on that 1099 for that sugar baby. All of these things listed here would likely be included as well. Number 4, what about shared use items? Example, penthouse suites, lavish dinners, concert tickets, etc. If the sugar daddy pays for all but shares in it, would 1/2 approximately be deemed possibly taxable to the sugar baby? Now, here's where things get interesting. Now, on the surface, the answer would be yes, right? But you have to consider there's so many situations where there's especially shared housing, and that there's multiple homes and then your parents live in that one home. How many of those situations are resulting in the filing of a gift tax return? Maybe not all that many, right? If your girlfriend moves in with you and you're covering the entire rent, out of 1 million of those situations, how many of those have resulted in a gift tax return? I'm not saying that one wouldn't be appropriate in that situation, but I feel like there's a bit of a gray area in terms of what do you count in those sharing situations, right? If, let's say, you have a 16-year-old son at home and he's living in your house, he's eating your food, he's driving your car sometimes, using your cell phone sometimes, using your computer sometimes, are you really adding all those amounts together to facilitate a filing of gift tax return? I don't know. Point is, the idea is that yes, if you have these shared items for purposes of facilitating this relationship in that there's exchange for services for goods, a lot of these shared use items should be allocated. But again, you'd want to take a detailed analysis, take a step back, and analyze all these different amounts and see if you could carve out any of them as gifts. Otherwise, the default tax treatment, unfortunately, is that essentially they would also represent income, because you have to think, instead of giving someone use of your residence, fair market value of which throughout a year could be $20,000, $50,000, what have you, you could have given them the cash and then they could have rented a different property. So essentially, the fact that you're giving them that fair market value of goods and services through shared use instead of cash is not changing the tax treatment. So you have to be aware of that. But again, I would sit down, itemize all those different transactions, and see if you could possibly create a more favorable tax treatment than just including everything in income. But I can tell you, you're not going to have too many court cases to rely on for this specific kind of situation. So again, preparing the tax returns for this dynamic would be certainly interesting and a lesson in this industry, if anything. All right, moving along. 1099 can be filed late, like 2 or 3 years later. Just that sugar daddy would pay a penalty for late filing, I assume. Essentially, that's the case, right? So there's two sides to it. There's the person issuing the 1099 and the person that is supposed to receive the 1099. The biggest motivating factor for the issuance of those 1099s is to make sure that that recipient actually reports the income. So hopefully the recipient's reporting the income whether or not they receive a 1099, because it's not that, oh, I received the 1099, I have to report the income. If I don't receive a 1099, I don't report the income. That's unfortunately not how it works. Your responsibility as someone who has a 1099 filing requirement is to go ahead and make sure you file it. If you file it late, you may be subject to penalties and interest. So there are really no issues aside from that you would encounter on your side. As far as the sugar baby is concerned, On that side, the question revolves around whether that income was reported, because certainly you want to report the income whether or not you get Form 1099. On top of all this, another question is whether any of these sugar baby expenses qualify as business deductions for the sugar daddy. Again, I don't think I could cite a court case that deals with this subject matter specifically, but what I could say is that claiming these expenses as a business expense would be an uphill battle at the very least. Don't try to put these expenses on Schedule C. Don't try to put them on the 1120S or the 1120, being the S corporation and the C corporation returns. They really don't belong there by default. Again, every situation needs to have a thorough analysis of the facts and circumstances. But looking at all of this, if I saw this on the Schedule C, S corp, or C corp return, I would have some serious questions. And a lot of these expenses might be reclassified as distributions, and they might create all sorts of unfavorable tax treatment if they were run through the corporate account or the corporate credit card. So I would keep all of this separate. I wouldn't really account for these items as expenses for the sugar daddy from a business perspective, but for the sugar baby, certainly most, if not all, of these items would constitute income, unfortunately, unless you could show otherwise based on the facts and circumstances. But I think it would be very tough to do so. With that, you do want to consult with a qualified tax professional. I don't know who would be one, because everybody's probably new to this as I am, but I'm just giving you my perspectives as somebody who's done a whole ton of tax returns, and this is not a situation that you see very often. At the end of the day, you want to make sure you deduct what is deductible and allocate what isn't and treat it accordingly. All right. So, Peter, hopefully this adds some color to your questions and some clarity to your situation. If you found this video helpful, feel free to hit that like button, leave a comment, subscribe to the channel, and hit that bell icon to be notified of future videos, because there certainly will be more. With that said, hopefully this was helpful. Thanks for watching.